Hi everybody, it's your guy here, the unknown, and today I want us to look at the most explosive trading strategy for indices. It's just a continuation, guys. Up until you get to a point whereby trading becomes boring, you still have a lot of things to learn. Why? Because the nature of trading is boring. You are doing the same thing over and over and over again each and every day. Okay, you have the same entry criteria, you have the same exit criteria, and it's literally rinse and repeating, and that's the same thing you do over and over and over again. Hence I always advise you to go and watch podcasts where they interview best traders around the world, because one thing you learn is trading is about rinse and repeating. That's what everybody calls it, rinse and repeating. Why? Because you are doing the same thing over and over and over again. Okay, and that's why I'm always against learning the strategy, tomorrow the strategy, tomorrow the strategy, and then you actually keep on learning strategies. You might spend 20 years learning different kind of things. That's not going to work for you. But the moment you master one strategy, focus on it and work to making it your own. In other words, understanding it and modifying it here and there to make it your own. Okay, make it resonate with you, make it work in a way that you understand, so that whenever it's presenting, you know that this is the opportunity that is presenting and you take it without fear. So guys, without any further ado, let's jump into it. Okay, our criteria remain the same every day. Trade volume before the session, equity opening time, that is 9:30 US time and 3:30 South African time. Trade volume during the session, we use patterns, chart patterns. These are not new patterns, these are patterns we all know. Okay, and then we wait for the evidence candle and then we enter if everything is met. However, we can actually take this trade even if this one is not really met. Okay, and I'll have explained to you why, but these other ones you must make sure they are presented. Okay, so guys, let me show you something quite quick over here. Okay, this is from Peter Brande's book, where he was actually being interviewed, because on that book there's a session where he was interviewed, and this is the very first question. This is the very first question he was asked on his book. Peter, let's start out with with what you consider to be the component of a successful trading approach. And Peter said, before you even get to that, you have to define the purpose of the market. The sole purpose for the existence of the capital market is to reallocate wealth from the many to the few. Okay, this is the primary function of markets, whether economists want to admit it or not. If this function is not satisfied, the markets will cease to exist as we know them. Since that is the reality, to be successful, you must align yourself with the few rather than the many. And already we know that there is a statistics which actually says 90 to 95 of retail guys are losing on the market. So this is why they are losing. Markets are not made to actually give you anything. They are made to take from you and give to the few. I believe the few are those who actually control the economies of the world. Why? Because we already know that 90% of the world's economy is controlled by 10%, or it's owned by 10% of the people, and the remaining 10% of the economy is shared by 90% of the people. Okay, so there is a very small group of people who is actually controlling the entire world. Okay, and they will keep it that way because they are also using their markets for their own benefits. Okay, so guys, once we know that, our goal is to align ourselves with the few. And who are the few? The insiders. Okay, the insiders are these guys. So we have a couple of ways to really identify. This is a book by Shabaker. I shared it too many times with you. And How to Become an Insider. These are two different books. Okay, he's showing you how to become an insider, how to become, or how to actually execute like the insiders. Okay, the second, he gave two options. I'm going to only read the second one because this is what actually aligns with the video. Okay, the second is to discover what the insider is doing in the market and to follow his lead. Okay, Peter Branded said, align yourself with the few rather than the many. How do you do that? Okay, you have to understand or to discover what the insider is doing and follow his lead. Okay, this is important. Please don't forget this. We follow the insider's lead. This is highly important. Okay, so guys, okay, let's go back to the charts. I'm going to show you something. Let's go to our criteria. Okay, I told you these are the criteria, and I told you I need the evidence candle. Why? Because the patterns are gonna help us understand what the insiders are doing. They use patterns to trap traders. Okay, and they've used patterns for many decades. Okay, so this is nothing new. We're gonna use patterns. I know most of you have heard patterns too many times, but you haven't really applied them in your day-to-day operation. But it's important to understand these patterns. Okay, and the evidence candle, the only reason I use an evidence candle is because, as Shabaka said, you must follow their lead, understand what they're doing. We use pattern to understand what they're doing, okay, and then we follow their lead. You cannot follow a lead if they haven't led yet, okay. So guys, if you don't know a place you are going to, and somebody is taking you to that place because you don't know the place. If the person says, okay, I'm gonna take 30 minutes, I'm gonna go to a store and just buy this and that and that, you can't say, okay, you are delaying me, I'm going. No, you have to wait for them because they know the directions, right? And then after they are done, that's where you follow them. So the same applies here. You don't know what they're gonna do until they lead. So be patient, sit on your hands, be lip shoes. If 90% of the people can sit on their hands, if people can sit on their hands 90% of the time, they will make more, okay. Sit on your hands, wait for them to act first, okay. So guys, we're gonna follow our criteria. The first criteria actually says what it says: identify trade volume during the session, okay. So I'm gonna show you on this day I actually took Nasdaq, okay, but I'm gonna show you why, okay. As you can see, this is trade volume before the session, and the reason I want this is because I know that most of the days they're not going to release them. So if they are taking me all the way back, or if I'm gonna long here, if I'm gonna go long, I don't want to be dragged all the way into trade volume. No, I don't want that. I literally want to be cautious because I might end up being part of this trade volume because mostly they're not gonna release them, okay. So that's the most important thing you should understand. So once we have identified that, the second criteria says what we wait for the US session to open, okay. So I'm just gonna go to a 1 minute time frame to actually do that. Why? Because this is not rocket science. You just have to look at your time, 3:30 South African time, okay. And that candle is this one. This is the candle that opens the session. I'm not gonna chase it. That's my principle, okay. So what do we have? We have trade volume, we have a slope, okay. They're sloping down. This is mostly a sign that they are gonna explode, okay. Mostly if it happens before the session begins. However, look at this. They just pumped and then they dumped. You see, yes, this is a very good pump and a dump. However, there is no clean pattern here, okay. We did mention this, okay. We did mention this trap volume before the session. This is trap volume, the orange highlighter, okay. 3:30, waiting for this to open. This is 3:30 South African time, 9:30 US time. You can just convert your own time zones. This is the candle, okay. Everything is met. Now trap volume during the session, up to this moment I don't see a pattern, okay. I don't see any pattern to this moment, okay. So we don't have a pattern, there's nothing to take. Let's go to US100, which was Nasdaq, on the very same day, okay. Identifying the trap volume, I do this roughly 5 minutes before the session begins, or 10 minutes, okay, because I need to know where they are trapped, and I will only know that when the session opens, okay. So guys, as you can see, trap volume above, okay. So I'm just gonna do it like this. So this is trap volume, okay. You can just write it out because I prefer, for the sake of time, I don't want to do many things, but I prefer, okay, trapped. I prefer marking your chart as everything is happening so that you don't get confused. And then once they are trapped, we're gonna wait for the session to open. What do? We go to a 1 minute time frame, okay. Why? Because this is not rocket science. What we need is just to identify, to wait for the time, okay. So it's 3:30 South African time, 9:30 US time, okay, 9:30 a.m. actually. When you look at Nasdaq, you will realize something fascinating happened. They are on the closing price, which is an important key level. However, just look at this, okay. This is where they were bouncing. You see, they gave us something like a rectangle, okay. And then when we come and take this low over here, we will realize that, oh, we also got this, you see, they bounce, they bounce, they bounce. This is where they hit it too many times. What do we have? We have a rectangle, okay. And we are not going to chase the first candle that opens the session. Why? Because we need to identify trap volume during the session, okay. So yes, during this day they started trapping early, but you can see this is still part of this, okay, because this is a good pattern. I told you about the patterns, and I love it when they give me a rectangle, okay, because that simply means they are gathering orders here, they're gathering orders here, and there are people buying and selling all over here, okay. So what do? They come and stop hunt this guys here, okay, fine. Okay, they stop hunted these guys here, but I'm not talking about that, okay. So but they came and stop hunted everybody who sold here, okay. And then the session began, they went down and they went up. Okay, they gave a very beautiful engulf to the upside, but I didn't take it. Why? Please answer that. Simply because we have trap volume over here. That's why I wrote trapped here. This orange color is trap volume, so I don't want to be taken into trap volume. I've been saying that too many times, okay. So I'm not gonna take this, okay, even though the pattern was there, but because I'm in trap volume, I don't want to take it. Why? Because I know I might end up becoming trap volume, okay. So look at what happened. They collapsed prices. Here's a very beautiful engulf. It closes just below the closing price, okay. So after trapping traders, this is a sign that they're going down, but I didn't take this one, okay. They tried to go up and then they collapsed. You see, when this candle closed, this is the one where I entered. Why? Because if we bring the EMA, I don't really use the EMA that much, but I understand it, and it helps. Okay, right now this move is in alignment with the 20 EMA. Okay, it's inside and it's going down. Okay, so this is the entry. Okay, this is the entry I took. Why? Because you can see they are already exploding down. Okay, we have a pattern which tells us what they were doing. Let's go back quite quick. I don't want to waste time. Okay, if you look at the second is to discover what the insider is doing in the market and to follow his lead. Okay, we use the pattern to identify what he's doing. Okay, and we follow the lead when it's there. The lead is there, evidence candle. Why? Because already they are exploding downwards. Okay, so that is the lead and that is what I'm gonna follow. Okay, so you can just pause this here and just read here, you'll understand. Okay, because I'm only sharing the second method that we use to identify what the insider is doing. Okay, so you see 50 pips got hit very quite quick. Okay, 50 pips. I told you when it comes to 50 pips, I don't compromise. Okay, some people say, hey, you are leaving a lot on the table. I'm not leaving a lot on the table. You realize it in the long term, okay, that you are not leaving anything, because sometimes you're gonna take a move that's gonna go roughly 55 and then collapse and then pull back. Okay, so you want your take profit to be hit. Okay, so you see, if you want to be greedy, open two positions, different lot sizes, and allow one to run and allow one to hit your take profit, because you want to get paid. Okay, so I'm only going to explain this right now, even though I know that many things happen when we go to the types of trends. We did explain a trend whereby we get a slope at the beginning of the session and then prices break down. You see, we had a beautiful slope. As you can see, prices broke down and then now they creep to the top. What did we say when we were discussing types of trends? We said that most likely they are gonna continue down, of which they did. However, there was nothing clean here because they were just you see, they were just doing their nonsense. But this was an explosive trend and it ended up going down, but I didn't take it. So this was one of the best trades on the day. And then later on, what they presented another opportunity. Okay, let me just show you quite quick, guys. I'm going to be very quick because I want this video to be less than 20 minutes. Okay, I know that you guys are busy and there are people who hate long videos, so I just want to make these videos a little bit fascinating. You see, this is a shoulder, this is a shoulder. What is left? We need a head. Okay, this is a pattern. I know most of you will say, but we didn't see this, this and that and that. No, this is a pattern. You must start learning more about patterns, and the book I just showed you, Shabakar, has a lot of patterns. I'm going to show you in a moment. Okay, I'm going to show you in a moment. That book is gold. If you can get it, please do. Okay, this is the neckline, guys. This is the neckline. Okay, we'll take the bodies. Okay, I use the bodies. This is the neckline. If you look at it carefully, this is a head and shoulder, but there's no pattern like this. I showed you last week that there are patterns like this. I'm gonna show you again that we have patterns like this. And then here we have what? We have something like a wedge. Okay, it wasn't clean, but this was a wedge. Okay, as you can see, this was a wedge, and this is the candle that broke out of the wedge, and again it broke out of what? Out of the head and shoulder. Okay, and this is the entry and this is the exit. Very actually, it's actually very quick. Okay, entry and exit, as you can see, 50 pips, very quick in 12 minutes. Okay, 50 pips in 12 minutes. You see, this is the most easiest things you can take each and every day. Okay, right now let's go to the following day. Okay, I don't want to spend most of the time, so I'm not going to explain most of the things because you guys told me that you don't want long videos, so there's a lot I'm going to leave out. Okay, but I'm going to show you the things you want to see and the things that make sense. Okay, why? Because I can't literally explain everything that's happening in a less than 20-minute video, and since you guys keep complaining, I am giving you what you want. Okay, so guys, let's just go. This is trap volume before the session. Okay, and again we have a slope. Okay, this is what let me see, this is US30. Okay, yes, this is the one I took. Okay, so we have a slope. Okay, and the session opens, trap traders are here. Okay, you can just write trapped. For the sake of time, I'm not going to do that. You guys said you want short videos. Okay, you said you want short videos. Oh, this is Nasdaq. I took US30. Okay, let me just show you. Okay, this one also gave a head and shoulder. I didn't take this one. Okay, no, let me just cut time, guys, because there's a shoulder, head and shoulder. Okay, shoulder, head, shoulder, and then boom, they go 50 pips. But let me show you on the one that I took US30 on this day, or it was yesterday, it was on Friday. Okay, I took US30. Let me show you US30. Okay, 15 minutes. Let's identify trap volume before the session, because I took US30 and Nasdaq. Okay, as you see, trap volume is above, okay, before the session. Now we're gonna go to a 1 minute time frame. Okay, and then I'm just trying to push time, because guys, you keep complaining. Okay, you keep complaining about time. So you see, this is trap volume. This is the candle that opens the session. I'm not gonna chase it. Besides, we had news at 4 p.m, so I'm not gonna risk anything before the news. Okay, so I'm gonna wait for the news to happen, which is the candle that where the news happened. This is the candle where the news happened. Okay, so if you look at this, okay, yes, we have trap volume. The session opens, they came down, down, down. No clean pattern here. Okay, we are waiting for the patterns. The only thing we have up to this moment is a slope. You see, they are just sloping down. But look at this, guys, look at this. When you draw this line over here, what do you have? You have a rectangle. But is it only a rectangle? No, it's not only a rectangle. We have one. They went down. Okay, so guys, I want to be very quick with this one. Okay, this is one. Okay, and then this is gonna be two. So what you have, it's a triple bottom. Okay, I know most people didn't see this, it's fine, but what you have right now, it's a pattern. Okay, the patterns that we all know. This is a triple bottom. Sorry, I'm running out of time, but it's fine. Okay, this is, okay, number 3, this is a triple bottom. As you see, this is the candle that exploded out of the triple bottom. And then let's bring in the EMA, the 20 EMA. You'll realize that this candle closed inside the EMA, and it's the engulfing candle. Now they showed you what they were doing through the pattern, and now you have to follow their lead. This is the lead. Okay, this is a very, very clean lead. Where is 50 pips? 50 pips got hit very, very quick. So I posted this one in the community, and I literally say they can go all the way back to the closing price of the previous day. Go and look at it, it's there, you'll see. Okay, so this was 50 clean pips. You see, 50 pips in 4 minutes. This is what we want. Okay, even though the same thing happened, a market that is broken down. Now they if you bring a slope here, okay, before that, let's remove the slope so that everybody can see clearly. You see, this is the slope. Okay, they removed the 3, it's fine. You have already seen that. You see, now we have a slope like this. Okay, this is more likely gonna continue. Why? Because we have a creeping trend over here that gave us a slope, and prices literally did what? Prices broke down, and then they started this, and then eventually they fell. Okay, they did continue because this was an explosive kind of a trend. But anyway, this was the most cleanest opportunity of the day. Okay, and it also happened again on US 500. Let me just be quick. Trapped volume, yes, before the session is here. And then let's go to a minute time frame just to simplify. 1 minute time frame, we're gonna wait for them to open, and then literally they go down. Okay, yes, of course there are people who saw a wedge here. Okay, there are people who saw a wedge here, but this candle was way too big. This is actually what we call S&P 500 is very, very explosive. As you can see, this is wait a minute, yes, this is S&P 500. They gave this and broke down. So look at this candle. When you look at this candle over here, you realize that this is a very big candle. Okay, it doesn't make sense risking taking 1:1. I don't like that. Okay, so if you look at this carefully, you will realize that they gave a shoulder. I want to show you something, and this happens most of the time on a 1 minute time frame. They give you a head and shoulder, okay, and then eventually they give you a wedge. You saw the first wedge that happened earlier on. Okay, so even here they give you the same thing. They gave you a, oh god, okay, they give you a head and shoulder, and eventually they give you what? They give you a okay, this is head and shoulder, right? And then let's draw the neckline. This is the neckline. Oh, clean. And then again they give you something like what? Like a wedge. Most of the days you realize that they do this. They give you a pattern within patterns. Okay, and this will aid your decision. Okay, because you see, now they gave us the very same thing. If we were to bring in the EMA and the time factor, you will realize now that, okay, this move is in alignment with what is happening. And if you look at it carefully, you realize that you got your 50 pips very clean. You see, you got your pips in roughly 10 to 11 minutes. Okay, so guys, this is what I need. I need something that is in motion and to follow the lead, because the patterns are going to show you their lead. So you don't have to take each and everything. Take it when you have a clean pattern that you understand. Guys, I'm done on this one for the sake of time. I told you I want to keep it less than 20 minutes, and I believe you understand this. Okay, have a beautiful day and have a beautiful week ahead. Thank you.